Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Friday morning webcast. Okay, so I'm getting this out a little bit earlier today because we have the jobs report at 8:30. So daily chart, and we talked yesterday about with every high or low, the bears become more vulnerable to new highs. The converse was we talked about we talked about it in depth in the room as it was happening, was if the bears continue to make lower highs, if they had a break, and if they were able to break the 80-81 area, it was going to be a quick trip down to see the daily midband. That set up a really nice short for us in the room, and off we go to see the daily midband. Now, what is concerning if you're a short, if you're a bear, is you got support at daily midband so far over the course of two Globex sessions. Look, there's a lot of Globex left, and a lot can happen. And if there's a day that the bears can break it down, the scenario is there for them to do it today. When we get out on the hourly, you see that they took it up at the open. They took it as high as 93 pre-market, 92.75, 93.93. Then it fell out of bed. The scenario was here for it to go and see weekly pivot. The bears didn't capitalize on it. The air comes out of it, and we take it right straight down pretty much to monthly pivot. You've got the hourly pivot down, you have the daily midband down here. This is an hourly chart, and you've got the monthly pivot. At the time, the price band that we were looking at was 71.75 to 68, 69, depending on what the daily midband, which is just your 20-day simple moving average, happened to be doing at the time. Right now, the midband is about 28.70, monthly pivot is 71.67, and we've seen moves up to the hourly midband and back, up to the hourly midband and back, up to the hourly midband. Look, if the hourly midband wants to consistently act as resistance today, the bears will ultimately win the battle. So there's no sense in trying to game this thing before jobs. It's kind of like it's like FOMC day. We don't try to game the results. We look at the reaction. We try to see, if it's making higher lows or lower highs off of the reaction range. We trade it from there. It's been incredibly successful for us over the years. It's better than trying to guess which way it's going to go. Don't game jobs. Don't game the FOMC. Don't flip coins. Don't be a cowboy. Just don't do it. It's not worth it. There's too much volatility in this market that's providing too many good setups for you to be fooling around, trying to act like an amateur economic genius, trying to decide what the reaction is going to be to non-farm payrolls. It is an intellectual exercise. It certainly has very little to do with price and risk. Focus on price, focus on risk, and the setups will follow from there. So that's my 30-second rant on trading around big economic numbers. So as we do this, look, we have been consistently buying this every time it comes down, and it's been successful for us. And the attitude that I'm taking right now is the bears have to prove to me that they can convert daily midband. They have to prove to me that they can convert monthly pivot. If they do, I'm the first one in line to get short. We'll short this down. We shorted not all of this down. I didn't catch it up here. It was a nasty little move to trade. There was a lot of false support up in here around 90.91 at our proprietary moving average in VWAP. Fell out of bed. It dealt with our proprietary lower level down around 81, 80, 81. That allowed us to get short. So we caught most of it, but we didn't catch all of it. And we caught enough of it to have a really solid day, which is all that really matters. If the bears can convert these prices, then I will be the first one in line to get short because it's going to be a significant, it's going to be a short that's going to pay. We've done too many handles over the years off of monthly pivot support to give the bears the benefit of the doubt down here until they can start to consistently trade below the blue line. We're not trading below the blue line. We are trading above it. They need to deal with these areas. They need to convert them to resistance. Otherwise, they're going to take whatever reaction we get from jobs, and if we can't get below the blue line, eventually we're going to head higher, and we will challenge that 92.93 from yesterday. All right, everybody have a good one. I'll be out with some stuff on social later. We'll do a midday. We'll do a wrap-up, the whole thing. Trade them well. I'll talk to you then. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.